ARM Holdings is an interesting AI company in that so far it hasn't produced or designed its own chips, although it is considering this strategy shift, which has some investors either optimistic or concerned, depending on where you stand in this strategy shift. Prior to this, ARM Holdings sold its proprietary patented technology to companies like NVIDIA and Qualcomm, which used its designs to design and manufacture their own chips. This would mean that it could compete with those companies that were previously its customers. So that has some investors more interested and some a little bit less interested. Regardless, I'm going to evaluate ARM Holdings over the previous several years' revenue growth numbers. I'm going to look at their cash flow numbers, the returns on invested capital. To answer the question if I think ARM Holdings stock is a buy at current valuations, and of course, I'm going to look at prices, stock prices, price to earnings multiples, and my discounted cash flow valuation model, which I've created and I'll share with you in this video here, to determine if the stock is a buy at current prices. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So revenue growth has remained solid for ARM Holdings at roughly 20% year over year for the past 2 years of data that we have for ARM Holdings. We don't have too much data for this company because it was only recently IPO'd and it only recently became a publicly traded company. ARM Holdings management team has forecasted that for the 3 to 5 years ahead, they're going to grow their revenue between 20, maybe 22%, maybe 25%. And so revenue growth will remain relatively stable at around 20% for ARM Holdings for the next several years. Now, the company's technology is used by NVIDIA. And of course, you probably already know that NVIDIA's sales are soaring, driven by demand for artificial intelligence, driven by increasing power needed for the computing requirements for artificial intelligence. Those accelerated computing units sold by NVIDIA is really the epicenter of this AI boom. More broadly, the end markets, including consumer electronics, are also experiencing an increase in demand from end consumers. People are paying more for more powerful consumer electronics, especially in smartphones, where people have been upgrading to more premium smartphones embedded with more technology. And of course, that's good news for companies like ARM Holdings, and I already mentioned Qualcomm. And Apple has also talked about these trends where people are buying the more premium end smartphones, which have more technology embedded. And that's great news for ARM Holdings. The company's cash flow from operations to sales number has been on a downtrend in recent quarters. Thankfully, that downtrend reversed for at least one quarter to 21.82%. Although I think ARM Holdings needs to deliver a couple of consecutive quarters of increasing CFO to sales to assure investors that this downtrend in CFO to sales will not continue. ARM Holdings has been hiring aggressively to meet this rising consumer demand, to keep up with the research and development it needs to do in order to keep up with its lead in the proprietary technology that industry participants are willing to pay ARM Holdings for. They pay ARM Holdings a licensing fee or a royalty fee for each unit that has ARM Holdings designs, proprietary designs included. And so it needs to keep up with the research and development to make sure that no other participant in the industry leapfrogs it and takes its place as one of the more leading technologies that these semiconductor companies deployed. The returns on investor capital have been solid and increasing at 14.2%. The number is rising from around 2% in January of 2024. Good news with this business. Now, if they go into the potential shift into chip manufacturing, that could change this whole model, this asset-light business model that right now it has, And that's why I said it's raising question marks from some investors that are a little bit concerned about the change in strategy. Some investors like that ARM Holdings didn't participate in any of those expensive parts of the semiconductor industry. They liked that it only licensed and sold its proprietary technology to others who paid it a royalty fee or a licensing fee. That's a very asset-light business model that could be lucrative in the long run because you're not putting up that much capital into the business, a relatively low amount of capital compared to sales, compared to profits. Now, if they invest and they go into this chip manufacturing side of the business, that could mean more revenue. It could mean more profits, but it could also mean, it will very likely mean more capital required to be invested in the business. And maybe, just maybe, the revenue and profit increases that they'll get will not be sufficient to justify the larger capital investment into the business. So that's the question mark surrounding that strategy. In my opinion, I prefer if ARM Holdings stay out of the manufacturing side of the business. The manufacturing side of the semiconductor industry has been notoriously difficult, billions and billions of dollars required. Now, they can do this with partners and they don't have to manufacture their own. They can outsource the manufacturing to Taiwan Semiconductor. And so they can reduce the amount of capital expenditure required to build their inventory, but they'll still need to pay for the inventory. And so it still would mean more capital investment required, more capital to be put into the business. Because of the company's recent struggles in terms of share price performance, the forward price to earnings ratio has fallen. To start the year, the forward PE was closer to 100, and it's now trading at around 55, 56 forward PE, which is a more attractive valuation than where it was to begin the year. Now, my discounted cash flow valuation model, which I updated today on March 12th, 2025, has its intrinsic value per share at around $37, while the current market price is $112. So according to my DCF, ARM Holding stock looks overvalued. According to the forward price to earnings, it also looks slightly overvalued. So to update my recommendation on ARM Holding stock, I'm rating this stock as a hold, and I updated that today, March 12th, 2025. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.